Hi, this is video number 8 in the African Mission Healthcare Financial Management series. And we've just covered the topic of revenue forecast and accounting. And now we're going to talk about the other side to that coin, which is cost accounting. And when we bring them together, I think it'll be helpful to discuss what these things ultimately can do for an organization when we get into the wrap-up. So after this video, there'll be just one more in this series where we'll talk about that. When we think about costs, it's often useful to separate out on two different dimensions. The first is variable versus fixed costs. And an example of a variable cost is something where the incremental amount is incurred with each administration of a service. So every time a patient comes in and gets an inoculation, the cost of the vaccine that goes into the patient's body is a variable cost. A fixed cost, on the other hand, is one that doesn't vary with each activity performed. Maybe there's a nurse manager on duty for the entire clinic when a variety of services are being performed, and the number of nurse managers on duty doesn't vary with each additional inoculation that's given. Both of the examples I used were examples of the second breakout, which is direct versus indirect. And they're both direct, meaning that they're directly related to the care of an individual patient. And so the example of the vaccine going into the patient's arm doesn't get more direct than that. But indirect, there might be things like the cost of the electricity that goes into keeping the lights on inside the clinic. That is something that may be variable, meaning we didn't turn the light on in the room unless the patient was going to be given treatment. On the other hand, it's fairly indirect. And another example of that on this slide is nutrition services that vary with the number of patient days, but those tend to be variable, but they're indirect. They're not directly related, but while the patient is in the clinic, they might have access to some nutrition services, and that might be something as simple as pamphlets on the wall or something like that. An example of an indirect fixed cost could be the cost of the finance department. So it's an overhead expense that doesn't vary with each shot that's given or with each activity that's performed in the clinic. It's more of an indirect fixed cost. And the reality of it is, when we're trying to figure out how expensive is it, how much does it cost the clinic to provide inoculations, there should be numbers in all four of these categories. And the numbers in the variable direct are typically fairly large. The fixed direct bucket are usually also fairly large, but not as large as the variable direct. And then the indirect charges, are usually pretty small, but they cumulatively add up. Examples might be maintenance on a building or something like that. It would be hard to associate the cost of depreciation of the building, maintenance for the building, with each inoculation that was given. That wouldn't even make much sense. But we do need to include some economic charge for that, because over time we know the building will degrade and will need maintenance. That's why all four of these categories need to be considered. So going a little bit deeper into our childhood inoculations, and I've cited some of these examples already. From a direct variable perspective, we need the cost of the vaccine, as I've mentioned. There's going to be time for the nurse and time for the aide. Occasionally, we might have to have a doctor's time included. Either the doctor needs to be around or on call in case a complication arises, or maybe the patient wants to talk to a doctor, or the patient's parent wants to talk to a doctor, and that consult is important. We certainly have some direct fixed costs that we need to consider. The nurse manager, as I mentioned, or patient education material, some things, a pamphlet that we can hand the patient to read, that they give back to us is an example of something that is directly related to the inoculation and is yet still a fixed cost. It doesn't vary with each, doesn't vary much with each individual procedure that's performed. And I already mentioned some of the indirect with the facilities expense, but all of these need to kind of be included, and you'll see that in the example. So looking at the cost for the inoculation program, what I did here was build an on average patient cost for the various things that I indexed on the prior slide. So the nurse time might be 10 minutes of nurse time, and that might have a cost of 0.25, or I should say 10 shillings might be the unit cost. I might use 1/4 of an hour, 0.25 of an hour of time from that nurse, meaning that the total cost would be 2.5 shillings. So the doctor might cost $25 an hour or 25 shillings an hour for their time. On average, I'm going to expect to use just 0.05 of an hour, or that would work out to be about 3 minutes per patient, and the total cost of the doctor's time might be $1.25. I might have an aide involved. The aide might spend a half hour total with that particular patient. They might have the lowest cost of 5 shillings per hour, and so they might cost us 2.5 shillings per hour. The facility nurse manager, the education material, and the facilities expense would all have the cost associated with the items on this slide. And for things like the facility nurse manager, I have to have some statistical approximation to allocate his or her time. So in this case, I just use 2% of the total time in any given hour that the nurse manager is spending at the clinic, and saying that that's allocated to the inoculation program. The most important thing is that in all the costs, the facility nurse manager's actual costs are covered by all the individual procedures, just to make sure that her time or his time is fully accounted for. And then the second part of the calculation here is the vaccine cost on the right-hand side. And each vaccine might cost a different amount per dose. So the 702 vaccine might cost only 4 shillings per dose, but the 698 might cost 12 shillings per dose. And so we have this cost of these services, the people's time and the facility and the education material, which averages 8 shillings 0.49 per patient or per inoculation, and then we have to add on to that the cost per dose of each one of the vaccines. The example here, if the math plays out, is we had a certain amount of labor and facilities calculated for each one of the vaccines, and right now we're just using 8.49 as the average. We have a certain amount of each that we expect to do, and we have the cost per dose, and so we can see the cost subtotal. If we're going to do 200 of these 9702s, it's going to cost us 2,498 shillings. If we're planning on doing 40 of the 723s, and the cost per dose is 10, labor and facilities is 849, the total cost will be 740 shillings for those. And we add these numbers up and we get a total of 8,864. If you didn't follow my math, that's okay. You can look at these slides later, but essentially I'm just multiplying these out and then adding them up in the cost subtotal. Initially, we had estimated that we would have 9,000 shillings in revenue for our inoculations program, and that would mean that we would make a small profit. So because the cost was 8,864, and we included things like the facilities charge and the like, we are going to make a very small profit on that of or whatever the difference between 9,000 and 8,864 is. I think that's 130 shillings of profit that works out to be. And the question is that enough? And the reality of it is probably not, because if we're only expecting to make 1.5% profit on the overall operation, the reality is that the estimating error might be significantly larger than that. And over time, we hope to be able to bank some of our profits to build a bit of a cushion. So that's the example. Hopefully that makes some sense. And we'll jump into the wrap-up next. But when we combine our revenue estimation with our cost estimation, we'll get some insights that are pretty powerful. So look